Hello everyone, I am Aman Kumar Singh, currently pursuing my PhD in Finance from Pune Institute of Business Management. Today, I am going to present on a very important topic in finance, the role of banks in microfinances. So let's cover this topic today. In this presentation, I'll be covering three sections, section 1, 2 and 3. In 1, we will be discussing about the foundation and overview. Coming to the second section, we'll be discussing about the mechanisms and support systems. And the last one is impact and the key highlights I will be highlighting. So coming to the section 1, foundation and overview. So let's start with this staggering fact that the microfinances sector in India has a portfolio over 1.5 lakh crores and which is a very massive amount of money. But the question is that where does it all come from? So the majority of it's come from the banking system, and the banks are, we can say that, the wholesalers, and the MFIs, which is the microfinance institutions, are the retailers who delivered the money to our doorstep. Further, coming to the second slide, the engine of microfinance. As we can see that in the presentation, there are two, how PSL, NABARD, and the banks linkage power to the rural economy. So we can see that the banks are the ones which drive the microfinances, but and taking this as a priority sector, and with the support of NABARD and some partnerships, and it also enabling the financial inclusion of the rural communities, like which are not yet developed so much across the country India. The second point, we can say that the partnership and financial inclusions, it demonstrates that togetherness, collaborations, and the animated handshakes between the traditional banking institutions and the rural microfinances clients. It also creates a route for the strengthening of the economic empowerments. Further, let's discuss about the law, like prioritizing sector lending. Why banks are so eager to give money to the MFIs and the poor borrowers? Like RBI mandate overview, here we can see that the RBI mandates 40% of the bank loans directed towards the priority sector and creating the regulatory framework of the financial inclusion. That means the first reason is, we can say that, the law. Like RBI forces all banks to lend the 40% of their total loans to what they call the priority sector, as we can see that in the slide. So this indicates the agriculture, like also this include agriculture, small enterprises, weaker sections, and by funding the microfinances, banks easily can meet the government target, and also we can see that the priority sector categories and the weaker sections, this will get also, by doing this, the MFIs are doing social goodness to attract the institutions and as well as the government also. Further, coming to the next slide, which is section 2, mechanisms and support systems. Like the first major role plays is through the famous SHG bank linkage program. In this model, we can say that the bank identifies a self group that has been saving regularly, and seeing that the group is disciplined, and the bank gives a loan directly to the group. So there are few processes: group formation, loan disbursement, strengthened relationships, bank connections, elimination of the MFIs, etc. So as we can see that the banks give loan directly to the group, and this is a direct connection of bank to poor households. and it has been the backbone of the rural finance in India for the decades. Second is the wholesale model. Banks don't always have the reach to the manpower the deal with thousands of the individual borrowers in remote villages. So what they do that they give large bulk loans to the microfinance institutions and the MFIs then take that money for first they give and also then they takes that money and add its expertise then lends it to the small then lends it into a small part of amounts, so the bank reduces its operations cost and the microfinance institutions get the fuel which they needs. So the next slide is the NABARD and SIDBI, the support system. We can say that the bank don't operate alone. They have two major pillars of support. First, NABARD, which encourages the bank to lend it to the SHGs and by offering the refinance, by offering them the refinances, which means that if a bank gives a loan to the SHG and also NABARD helps to the what we can say that NABARD helps to replenish the bank's funds, and then secondly SIDBI plays a similar role of the MFIs and providing them with the loans and also the support to ensure that they have enough money to lend out. Coming to the last section, impact and the key insights. So let's visualize this. Money flow architecture. As we can see on the screen that microfinance ecosystem layers, banking and refinances infrastructure, direct linkage model, wholesale MFIs channels. So these are the few money flow architectures. Like the RBI set the rules for forcing banks to lend the poor, and the banks then either lend directly to the self-help groups or they give wholesale loans to the MFIs, and supporting this like to ensure that and supporting this ensure cycles like the banks never run out of money to lend, and this also creates the continuous cycle of a fund flow from the formal economy to the last mile. Why this symbiotic relationship matters? This partnership is the very perfect match. Banks have the cheap capital and the regulatory backing, but opening a branch in every village is too expensive nowadays. So MFIs and SHGs have a deep community and also the trust to reach, but they lack of the huge funds. By working together, banks and MFIs can achieve what is neither could alone, the true financial inclusion for India's hundreds of crores people. Like it's more than hundreds of crores. To sum it up, banks are the powerhouse of microfinances driven by the RBI priority sector lending rules. They pump money into the system either direct to self-help groups or via the MFIs also. With constant support from the NABARD and SIDBI, this massive financial support exceeding 1.5 lakh crore rupees is what the types of the rural economy is moving currently. So thank you. That's all from my side as of now. Thank you very much.